Hi, good evening. Today, we are going to do on income statement, which is part of FSA, and we will be covering on how to compute basic EPS and diluted EPS. So, which is very widely used in financial analysis. And this is, of course, a very high probability question. And of course, basic EPS is easy to compute. It comes to diluted EPS, what comes in the numerator and what comes in the denominator is something which should be carefully understood and done so that you get the full score. It is a type of question which is highly probable and where you can easily arrive at the correct answer because it's a numerical problem. And once you are familiar with the how to get the right inputs into the formulae, then it becomes a pretty straightforward exercise. Okay. So let us go into this one, the definition and the computation of the EPS. So basic EPS is the amount of income available to common shareholders. So in the capital structure, the common shareholders, what they get is the basic EPS divided by the number of weighted average number of common shares outstanding over a period. So if you see the numerator in the basic EPS formula, net income less preferred dividends. So you have to subtract preferred stock dividend from net income. That comes in the numerator. So that is what is left for the common shareholder divided by the weighted average number of shares outstanding. So weighted by the time, okay, the shares are outstanding. Let us do an example. Basic EPS calculation, example 7. For the year ended December 31, 2018, Angler Products had net income of $2.5 million. The company declared and paid $200,000 of dividends on preferred stock. The company also had the following common stock share information. Shares outstanding on January 1st, million. Shares issued on 1st April, 200,000 shares repurchased, that is treasury shares that they have bought with the cash. So that they have reduced by 100,000. So the shares outstanding is 1.1 million. So this is not weighted by time. So that is what we need to find the weighted average number of shares outstanding. And then what is the company's basic EPS for the period, for the year? Okay. So first calculate the weighted average number of shares. If you see from the beginning of the year, 1 million shares were there for 3 months. So 1 million into 3 divided by 12. So 200,000. Then 200,000 got added and they were there for 6 months. That is October less April. So that is 600,000 is the weighted. And then 100,000 got debited. So you get 1.1 million and they lasted for 3 months. So the total is 275,000 shares. So the weighted average number of shares outstanding over the year is 1.125 million. Okay, now basic EPS is equal to net income, that is 2.5 million, less preferred dividend, that is 200,000, and divided by 1.125 million, so that is equal to 2.04 is the basic EPS for the year. So this is the technique to find the weighted average number of shares. Once you get the numerator, is quite easy. You have to subtract preferred dividend, stock dividend from the net income. Okay, now let's go to computing diluted EPS using the if conversion method. That is, if conversion occurs. And there are two in this, two cases. One is for preferred stock, other one is for convertible debt. So if it is preferred stock, So diluted EPS is equal to net income. There's no need to debit the preferred dividends because they will not be there. Divided by, see the change in the denominator, weighted average number of shares outstanding, plus new common shares that would have been issued at conversion. So you have to add the new common shares to the weighted average number of shares if conversion occurs. Similarly, if there is convertible debt in the capital structure of the company, so you have to use this formula: diluted EPS is equal to net income plus after-tax interest on convertible debt less preferred dividends. So because preferred stock is there, so preferred dividends goes plus interest you have to add to net income. That is after-tax interest. Okay, that is add back. And then weighted average number of shares outstanding plus additional common shares. That's what you need to find that would have been issued at conversion. The bond is converted into stock. So let us do an example. A diluted EPS calculation using the if converted method for convertible stock for convertible debt. Opnox company reported net income of 700,000 for the year ended 31 December 2018. The company had a weighted average number of 690,000 shares of common stock outstanding. In addition, the company has only one potentially diluted security, $50,000 of 6% convertible bonds, convertible at a total of 10,000 shares. Assuming a tax rate of 30%, calculate Opnox basic and diluted EPS. So you can do it like this: basic EPS in one column and diluted EPS using the if converted method. So in the case of basic EPS, so net income is $750,000. So conversion has not happened. The denominator will be the weighted average number of shares outstanding, which is 690,000. So you get 1.09 as the EPS, basic EPS. Now, if you come to the second column, the diluted EPS using the if converted method, net income is 70,000. You need to add the after-tax interest expense. The interest expense in the year is 50,000, 6%, that is $3,000 times 1 minus tax rate 0.7. So 3,000 into 0.7 is $2,100 that you add back to the numerator because there is no need to pay interest once the bonds are converted into equity. And the weighted average number of shares, 10,000 will add, so 690 plus 700,000, so it's 1.07. Now, there is one more method, is called the treasury stock method to calculate the diluted EPS. In that case, diluted EPS is equal to weighted net income less preferred dividends plus weighted average number of shares outstanding plus new shares that would have been issued at option exercise minus shares that could have been purchased with the cash received upon exercise. So the options, stock options. So the cash will come, so the shares will be purchased times into proportion of the year during which the financial instruments were outstanding. So this is a little bit carefully we need to see. Let us do an example. A diluted EPS calculation using the treasury stock method for options. Hi-Ho Tech Company reported net income of $2.3 million for the year ended June 2018 and had a weighted average number of 800,000. So this weighted average, not the outstanding, 800,000 common share outstanding. At the beginning of the fiscal year, the company had outstanding 30,000 options with excess with $35. No other potentially dilutive financial instruments are outstanding. Over the fiscal year, the company's market price is averaged $55 per share. Calculate the basic and diluted EPS. Using the treasury stock method, we first calculate the company would have received. So what is the cash they will receive? So if all the options were exercised, 30,000 times $35, $1,050,000. And if all the options had been exercised, then you will get 30,000 shares, new shares, options will not be there. Shares would be repurchased with the cash received upon exercise at an average price of $55. So with 1.05 million, you can buy back 9 divided by 55, 19,091 shares. So the incremental number of shares issued is 30,000 minus 19,091. So repeat, so 10,909. So that will be added to the weighted average number of shares. So you see in the basic EPS, there is no change, but in the diluted EPS, 2.3 million and options. So 800,000 shares plus 10,000, 810,000. So the EPS is coming to 2.84. Okay, this is how we need to do for options exercise using the treasury stock method.